Hey everyone, Anthony Gerbi here with another edition of Thursday Thoughts. And today I wanted to share with you the top 3 things I look at when we do a tax analysis for you. So, number 1, we look at where your income falls in the income tax brackets and whether it makes sense to do potentially a Roth conversion at the end of the year. Now, without going into too much detail, a Roth conversion is taking money from pre-tax and turning it into Roth money, which has already been taxed and grows tax-free. And the reason it's good to look at the tax brackets is, can we, quote unquote, fill up the bucket? All right, and that's a strategy where you fill up the tax bracket you're in currently to its maximum without going over, and try to pay, in essence, as little taxes as possible to convert that money from pre-tax to after-tax. Number 2, we take a look at whether potentially you qualify to realize capital gains for 0 taxes. So a lot of people don't know this. In non-IRA accounts, when you sell an investment, you have to keep track of what you bought it for and what you sold it for. Think of it like your house. You bought it for a price. When you sell it, that gain is potentially taxable. However, the thing most people don't know is that there are actually income brackets to the tax you would pay. So if you're under a certain level of income, you can realize gains for 0% capital gains taxes. Saves you money. Number 3, and maybe this is the most overlooked one, Medicare costs. If you're on Medicare or you're within 2 years of Medicare, because Medicare looks back at what your income was from 2 years ago, but Medicare also pays attention to your income. And that's a situation where if you go over the threshold of the Medicare brackets by $1, they bump your premium up by $70 to $100 a month, depending on what the year is. And you get the same insurance, you just pay more for it. So it's another thing that if I'm aware of it, I can help you kind of manage around it. So those are the 3 things that we look at. Why do we do it? Well, because it saves you money. That's ultimately what the goal is. Yes, it's great for me to be better informed, but the reason I'm better informed on your behalf is so that we can reduce the taxes that you'll have to pay either now or in the future. So if you work with us currently, you can get your taxes to us. Just reach out and we'll tell you how to get them to us. If you don't work with us currently, reach out and ask how you can get access to this program. You don't have to be a current client, but reach out to us and ask how you qualify for this. So that's our tax service. We just analyze your taxes. We're not accountants. We don't do them, but we do feel like we can find and help you find savings for the future.